So a very common question we always get asked is, based on the income that I make, what is the maximum allowable mortgage payment that I can take on? So this is an actual example that came to us very recently. It was a client that wanted to purchase their primary residence here in Houston, Texas, Harris County. They did have a credit score of a 640, and they stated that their annual income is $75,000 per year, which was salary based. Now, in addition to that, they also told us they have a car note of $600 per month. They had a credit card payment of $25 per month and student loans of $125 per month. Please note, we did not look at the total balances of those debts, but rather the minimum monthly payments that show up on the individual's credit report. Now, the first step that we're gonna do is we're gonna convert their annual income to a monthly number, and this is very simple. We're gonna take $75,000 per year divided by 12, and we obtain their gross monthly income of $6,250. Step 2, we need to determine what loan program fits this client. Now, VA was not an option. He wasn't a veteran. USDA with 0 down also did not work. The property was not in a rural area. Conventional was not a great fit. He had a 640 credit score. Conventional tends to punish once you go under a 680. So FHA was the most logical thing to go with here, with 3.5% down. Once we've determined the loan program, we need to understand what that loan program's maximum debt to income ratios are. So for FHA, the maximum front end ratio is 46.99%. This is the max mortgage payment you can take on if you didn't have any debts. And the maximum back end ratio for FHA is 56.99%. And this is the maximum mortgage payment you can have with debts. Once we've determined that, we can go to step 4. So we're going to take their gross monthly income, which was $6,250, multiply it by the front end ratio of 46.99%, and we get $2,936.87. Because we have debts, we're going to go to step 5 here, and so we're going to take their gross monthly income of $6,250 again, this time multiplied by the back end ratio of 56.99%, and we get $3,561.87. From that, we're going to deduct the monthly debts that I showed you guys on the third slide, which were $750, and we get a total result of $2,811.87 for their PITIA. That means this individual, based on this scenario, cannot have a mortgage payment that's higher than $2,811.87, and that has to include their principal, interest, taxes, insurance, association fees, and any kind of mortgage insurance fees. Now, with that being said, you may ask yourself, how did you know which one of the two results to choose between the front end and the back end? Well, it's very simple. You're always going to choose the lesser between the two. In this case, it happened to be the one minus the debts, okay? Now, step 7, once you've determined what your maximum ceiling is for your allowable mortgage payment, you can just go online, find any mortgage calculator, and start plugging in your particular scenario, and just make sure that you do not go over it. The reason we're not able to do that in this particular video is because I don't know what the property taxes are going to be for the state that you live in. We don't know how expensive your insurance rates are. I'm looking at you Floridians out there. We don't know what your credit score is, so I can't tell you what your interest rate is going to be. And I don't know how much money you're going to put down. So this is why the mortgage calculators online will help you, because now you know what that max ceiling is. Couple of final notes here for those of you that are self-employed. Please understand you cannot use your gross income. That's only reserved for people that are wage earners. For those of you that are self-employed, you have to use your net income, okay? Those of you that do have variable pay, such as overtime, bonuses, commissions, differential pay, etc., please understand you have to average those out over a 2-year time span. In many cases, we have to get a verification of employment to make sure those numbers match. For those of you that are interested in the front end and back end ratio of all the other programs that we talked about earlier, I have them here on the slide, so feel free to pause this or take a screenshot of it. And a final note, folks, just because you're allowed to do something does not mean you can afford it or you should. This is why I put over here, allowable and affordable are not the same thing. So please keep that in mind. Just because you can does not mean you should. If you have any other questions, give us a call or text today, 832-859-4144. Thank you for watching.